There hasn't been a whole lot of substance behind this latest wave of broad based US dollar selling and renewed demand for risk assets. When we break it all down, what it comes down to is a market that is doing whatever it can to will its way into a Fed pivot. And it seems as though the market is using a familiar strategy of pointing to the bad news and being convinced this will be enough to force the Fed into a reconsideration of policy when it meets next week. There was a headline out the other day that said US home price growth slows most on record as market hits the brakes. And the market has taken this as its sign that the Fed will surely backtrack and consider less aggressive policy. But again, none of this has been confirmed as of yet, which very well could mean the market has gotten ahead of itself, setting up the prospect for another nasty downturn in risk sentiment and resurgence in the US dollar. In our view, it continues to be about inflation. So long as inflation continues to run up, there should be every expectation the Fed will remain committed to the higher for longer policy track. The bottom line here is that we still don't think we're out of the woods when it comes to lower stocks and flight to safety demand into the US dollar. Key standouts on today's calendar come from the Bank of Canada policy decision and US new home sales. That's all for now.